it was just two of us, but we talked about Bitcoin the whole time. So if you're interested in having more of a small group discussion and learning more, that's a great place to start. Also, if you're thinking about joining the board, that's another great place to go and learn more about the board and the people you'll be working with. So if you're interested, I highly encourage you guys to come. And then one last thing about next semester. We already touched on the newsletter. We're going to keep that going, hopefully get it more up and running next semester. And then we're going to keep trying to stick with this format where we have 2 or 3 larger events, but then we also want to have those weekly meetings where we focus on just talking about Bitcoin, and that helps us keep the knowledge high. So that's it from me. I think we're ready.
So what we have right here is we have a QR code for the panelists. At the end, we're gonna have a little Q&A session with the panelists. I know sometimes it might be a little intimidating. Grab the mic and ask. So what I have, like if you guys want to scan this QR code, you can just have it in your search history, bring it up later, and if you think of something, just type it in there, and we'll have someone like look at it, ask the questions to the panelists, and we'll kind of go from there. And so with that, we're gonna get to the panel. So first, we have Paul. Obviously, is a professor here. As you guys all know, we have his father and as well as his friend. And we're gonna learn a little bit about them, about Bitcoin, kind of their journey, kind of what they're doing in the space, and kind of going from there. So I guess with that, we'll kick it off. And Paul, did you want to introduce yourself, even though most of these students should already know you?
Yeah, I think most people know me by now. Paul Nylen, associate professor at Whitewater. Helped onboard many of the students here. And then I can kind of give a short overview of the other 2 people joining me. So one is my dad, Dave, and he's probably like 1 Bitcoin class behind me or 1 year behind me. And then Austin, long-term friend, the person who orange pilled me, is a couple years Bitcoin ahead of me. So we got, I think, 3 people, and not 3 different cycles by any means, but kind of along the same trajectory. And I think we all came into Bitcoin in similar ways, sort of heard from a friend type thing, did a bunch of research, and then now we're however many years deep into this, and it's just like peeling back the onion now. So at this point, we're sort of beyond the question of is Bitcoin good and what can it do? We're now into the camp of like, how far do the tentacles reach out in different ecosystems, and what are those impacts, and what are the timelines for things like nation state adoption, and is things like S-curve and network effects still in play? So that's kind of, I would say, the 3 of us are the kind of the camp we're in now.
All right, Austin, did you want to go next?
Yeah, sure. Hey, everyone. Austin Wilcox, founder and CEO of AQ Capital. So my background is in finance and in risk management, and I applied those skills in the healthcare industry for approximately 15 years before discovering Bitcoin, and realized that healthcare in America may be irreparably broken, but here's Bitcoin, this city growing in cyberspace faster than any city we've ever seen in civilization. And I want to be part of that. And so purchased my first Bitcoin in 2016. So I've been along for a few rides here, and it's definitely a ride. And, I don't know how many hours in deep I am in terms of research. Paul could maybe estimate the hours that he's done. And I know I've been involved with a lot of that. But just look forward to just providing my perspective as an investor. AQ Capital is a Bitcoin-focused investment firm that I manage. And then as I look at things that I have to do in terms of managing, AQ Capital for myself, I certainly have things that come up where I say, you know what, I want that. Maybe I could productize that because maybe other people want it. And so I'll build it. And so, still looking for the first idea to really take off here, but questions and just provide my perspective with this panel today.
Yeah, awesome. Yeah, Austin, you went to both high school and college with Paul, is that correct?
Yeah, that's right. Yeah, we go way back.
Yeah. Did you want to talk about maybe your college experience at all? Like maybe some things you were involved in that Maybe some people wouldn't know besides, probably me that somewhat knows you a little bit.
Well, at University of Iowa, it wasn't Qdoba, it was Poncheros. Maybe we could contrast and compare Poncheros versus Qdoba.
I guess I was more referring to you played baseball at Iowa, is that correct?
I practiced baseball at Iowa. They never played me.
Okay, I was along the lines of that. David, did you want to go next then?
Yeah, thank you. Dave Nylen. So just an entrepreneur, owned a number of different companies, still own a couple companies right now and still working. And I was trying to think about my kind of a little bit on my past, but I looked back in my Coinbase account and actually had my first purchase of Bitcoin in 2017. And I don't know why I bought it then, except for the fact that probably was this shiny coin that I think my partner in my business I have right now was talking about. He was mining. I don't remember what he was mining, Bitcoin and Matic and ETH and some other things. And he was mentioning it. So I got this Coinbase account, jumped on. I look back, I bought $300 worth in 2017 in November. Then I bought about $400 worth in December. So Bitcoin was about $12,000 then, I think, somewhere in that neighborhood. And I turned around, and about 2 weeks later, I sold it for like $850. So I made $150 in a couple weeks, and I thought I was a genius. So that's my first experience. I had no clue whatsoever what beyond that. Actually purchased it again, maybe in 21 or something. Again, just nibbled in the market a little bit on it at the time. Really didn't know what it was then. And then sometime right after that, Paul called me and said, "Look, I'm thinking about mining Bitcoin." Was that right, Paul? Maybe 21 or no? Yeah, think about mining Bitcoin. So, and I was like, "Well, to really tell me what that is." And he said, you have to figure it out for yourself. Like you need to do the homework. You need to put the 100 hours in. And I said, well, where do I start? And so he sent me the Bitcoin standard book, and I read the Bitcoin standard book, got completely blown away. And after I read the book, I was all in. Bought a bunch of
All right.
miners, started buying Bitcoin, still mining, still buying Bitcoin.
There you go. That's the way to do it. I kind of have a follow-up question for you. So when we were down in Vegas last year at the crypto convention, Paul kind of mentioned to us that we're lucky to be the age we are. And even at our place, if we kind of judging the people in the audience here, they might have 0 Bitcoin accumulated right now, not even 1 Bitcoin at all. But he told me that he'd rather be in a spot where you're the age of maybe 20 and with 0 Bitcoin than some of the older friends he has who are talking to him saying that they've accumulated Bitcoin, but now they're at the age where they feel like they can't really get the full benefit out of it. What kind of comment do you have to the people in here who maybe haven't started accumulating Bitcoin? And even though they might feel like they missed the first overall hype and bull run of it, what might be in the future for them if they invest?
Well, I'm looking at it like this. So I think if you're 20s or 30s or 40 years old, you can look out 20 years or 30 years, okay? And in 20 years or 30 years, what's that nest egg going to look like? What's that pile of Bitcoin, the dollar value is going to look like? And for me, I can look out and say, okay, maybe I'm going to be here with my Bitcoin. But if you're 20 or 30 or 40, honestly, I think you have an opportunity to look out and think that you could own 20, 30, 40 million dollars or more. And not say easily, but it's possible.
Yeah,
With Bitcoin going to 10 million or 20 million or 30 million, whatever, 20, 30, 40 years from now. So missing the boat, absolutely not.
Yeah, I
We're
definitely
still
agree with that.
we're still early. I think we're still early.
I agree with that completely. I know I haven't started accumulating as much Bitcoin as I'd like, but my hopes are still high that once I start working and actually having income to put money into Bitcoin, there's still a great future for it. Kind of going to you, Austin, with this one. What would be like a really optimistic future or maybe a pessimistic future too of Bitcoin?
Oh, great question. Yeah, and maybe just to kind of build on what Dave was sharing there. Back in 1995, the first Windows operating system launched, was just a revolutionary software, and you had a choice to make the software update or not make the software update. And roll the calendar forward. What is it now? 30 years now, and look at the software we have now in the palm of our hand. It's incredible. And so, if you think about the software updates that represent inflection points in the history of different industries, in many respects, one of the analogs for Bitcoin would be like a financial software update for people, for countries, for corporations, for the world. The current system is a funhouse mirror that's broken, and Bitcoin is a fixed supply asset that's immutable. And so, if you think about the growth trajectory, I think the adoption of the internet in 1995 was approximately 1 to 5% of the world was using the internet on a daily basis. So roll the counter forward now, and what's that number? It's close to 100. However many people, certainly there's limited access to hardware in different parts of the world, and internet connectivity is being brought along at the speed of Elon Musk these days for the world. But Bitcoin is kind of in 1995 right now. It's in the 1 to 5% approximately in terms of global adoption rate. It's currently trading at what is it? What are we at? Like $2 trillion now? I kind of lose track these days of approximately what it is. But in terms of the global capital asset base, I believe it's less than 1%. Of the global capital asset base, if you look at it relative to real estate and sovereign debt and different securities and different assets. And so, but then the question is well, what's the upside? What's the potential future of Bitcoin? Well, the growth of Bitcoin historically has followed a very natural power law. Statistically significant to at the same orders of magnitude is when you look at the growth of energy and people inside of a growing city. And so if you look at a city like Dubai and the compound annual growth rate of Dubai, energy follows very closely along with that. The more people, the more energy infrastructure that's required, the more energy infrastructure that's created, the more people that come, the more economic energy and activity that's created. And it's kind of this self-feeding loop. In Bitcoin, you can think of it in the same respects, although it's not just growing faster than Dubai, it's growing faster than San Francisco did in the 10 years during the gold rush. And so if you think about it that way, and the network effect that happens when energy and people and capital converge on an economic singularity like that, the total addressable market for Bitcoin could be 1/2 of everything. And so what is that in today's terms? Well, it's probably somewhere around $300 trillion. So we're looking at what, like a 1,000x or 10,000x from here. If that is fulfilled, that prophecy is fulfilled. Well, what is the downside? Well, the downside would be is if one of the following things no longer become true. One is Bitcoin no longer verifiably scarce, meaning the rules of the protocol have somehow fundamentally changed to the point where the truth is no longer the truth. Okay. The second thing is security. Is the energy going into the network that's being invested in the network to protect the network and turn entropy into order, every day. Use just a sense of the scale of this network. I'll just read off a couple of fun stats here. It's kind of dark in here, so I got to read my notes. So the amount of energy that goes into the network annually in Bitcoin is 3 times the nuclear energy footprint of the United States. And it's more than the top 4 nation states, US, China, Russia, and France combined. If you looked at it as a sovereign nation on its own, it is the 22nd largest sovereign nation in terms of annual energy footprint for a sovereign military. So when you think about protection, when you think about security, you know, that's how large it is. It's already the 22nd largest. 15 times the naval power projection of the United States naval fleet, 100 times the B-2 bomber equivalent of the power projection. And all that is, you know, going back to what's truth and is it secure, all that is reinforced, and those rules are communicated and reinforced across a globally distributed node network that represents a 360x redundancy compared to the distributed Starlink satellite information network. So if some of that starts going from this trajectory down to this trajectory, in terms of the nodes disrupt around the truth of the scarcity and the rules of the protocol, or if the energy investment starts to bend, that would invalidate what we're currently seeing with the nonlinear growth of the network.
Yeah, awesome. Thank you, Austin. I guess, Paul, do you have anything to add on that, of just like maybe like your optimistic view versus your pessimistic view of Bitcoin? I know that we've kind of had these conversations in the past, just with like the board and just kind of talking to you in general. But I always feel like it's a good question to ask, just for, you know, those in the audience to kind of know about it a little bit.
Yeah, so on the pessimistic side, for me, I think Austin's points are really good. You know, one of the core arguments for Bitcoin, there's a lot of core arguments. One of the main core arguments is the strength of the network, and you can measure that in users or nodes. But I think the best way to measure it is in hash rate and in energy. And so I do think it would be a very interesting proposition if we saw the hash rate do, kind of a long-term downward trajectory. We've never seen that before, but I do think if that were to happen, you'd have to sit back and ask yourself, is Bitcoin what we thought it is? We've just got no evidence of that today. Zero, right? So I think that's, I think that's important to keep in mind. I think the other major pessimistic thing that I sort of contemplate, and which is very much in the Bitcoin ether right now, is this kind of unknown question of what quantum computing is going to do. And I think there's a lot of unknowns. And I think what makes it hard is even the people who steelman the quantum case don't really understand the quantum technology. So they don't even really have, even the people who are kind of in the supporting cast of quantum don't even really have a great grasp of what it is. They sort of point to it as kind of like the boogeyman, right? Like, oh, well, this could be out there. And so, the question, why is that going to matter? I think it's going to matter because if the network needs to upgrade or soft fork, you need global consensus in Bitcoin to upgrade the network. And getting global consensus on anything is a brutal take no prisoners type of argument. And if you want a good analog for this, you can read a book called The Block Size Wars that talked about a similar but different issue back in 2014, 15, 16. And so I think the issue of quantum is out there. I will say this, and this to me, I'm going to spin the pessimistic into a positive. I'm in the camp that in some 2 to 8 year period, we could see some extreme worry about quantum that could short-term crash the price. And I think it'll be a historically good buying opportunity. I think it'll probably be not the last best opportunity to buy at a low price, but I can see some type of internet rumor going on, like, oh, Bitcoin or quantum has hacked Satoshi's coins, and that spooks the market. And it we have an 80% drawdown, and it turns out to like not really be the case, or more complicated, or 6 months later the network upgrades to quantum proof addresses. So I just don't see a sort of a long-term pessimistic trajectory. I sort of see that we could see short and medium term issues pop up, but it's very hard to look at the past 16 years and come up with any strong argument against sort of the power law growth of Bitcoin. You really have to dive into an argument that revolves around like, well, Bitcoin's just only been around for 16 years, and so I'd rather have something like gold that's been around for 3,000 years, right? Other than that, it's very hard to look at the stats objectively and not be really bullish long term.
Awesome. Thanks for that. I know, Paul, you gave us 2 questions you wanted to ask other panelists. I guess this one's more geared towards Dave and Austin. We're going to start with Dave. I guess one question we had was pretty simple. Is the 4-year cycle dead? Just kind of elaborate, maybe explain to those who might not know what the 4-year cycle is, what it is. Do you think it's dead? Do you think it's alive? Do you think it's somewhere in the middle, or kind of what are your thoughts on that?
That's a really great question. When I look at it right now, I think the 4-year cycle is just going to get stretched out a little bit. So 4-year cycle, if you look at it, I think there's 500 and some trading days. Austin's probably going to know the number better than me. 500 and some trading days in between peaks. So go back 500 days in 2017, go back another maybe 2011, 2012, and you take that along with the power law, and it just goes up and comes back down and up and back down. And if I could pull up the power law right now in front of you and show you a graph of that and show you where we're at, I would say we're in the middle. We haven't hit quite the peak, and it's just maybe going to get stretched a little bit longer. And can it be stretched a little bit longer? My thought is, well, yeah, why not? There's a lot of different factors that are in place now that were not in place 4 years ago. So that's kind of my quick analysis of that. The other thing I want to just, if I can jump back to just the question before, to jump in there on the, when you look at, for me, when I look at some threats in the marketplace, I look at it maybe a little bit different, because I'm going to have to go way back in time too. And I'm going to look at it more as an entrepreneur and other businesses. So I think of quantum. When you look at quantum, there's so many other low-lying fruit in quantum to pick off long before you get to Bitcoin. Okay. The banking industry would be destroyed first, completely destroyed, from small banks to medium banks to large banks. The retail industry would somehow be completely destroyed. There'd be so many things to me that would be destroyed long before you would want to attempt to go in somehow and people have self-storage and try to steal their 0.001 Bitcoin that they might have in cold storage somehow. Okay. I'm not seeing that. So lots of low-lying fruit first. People that are going to steal something, going to grab that first, not probably going to tax, something else. And the other point is that, when you listen to Austin talk about Bitcoin, you hear him talk about the moat that's built around it. Okay. It's definitive to me. There's this moat, and the moat, it's not even like Amazon. It started out and it got so big that there's this moat. It started out as a moat. Does that make sense? Right? It started out as this purity and genius that nobody else could see. So that's how I look at it. It started out as a moat. It's still a moat, and I don't see long term. Are we in ups and downs and throughout the whole thing? And in 3 years, can it be still $100,000 after it goes up to 300,000 and come back down? Yes. But in 10 years, it's not going to be $100,000. It's just not. It's going to be 400 or 600 or 800. And in 20 years, it's not going to be $300,000. It's going to be something else, above there. So
Yeah, awesome. Thank you. I know that, I've talked to some other people about kind of the quantum kind of issue and kind of, I haven't dug into it too much. I've kind of looked into it. That's kind of my thoughts is that there's so many other things that would go before Bitcoin, whether it be small banks or retail. And yeah, also just going back to the 4-year cycle, I'm kind of still a little bit indifferent about it. I've seen a lot of talk recently about how the 4-year cycle is dead. And I know it's a big point in like the news and, whether it be Bitcoin Magazine, they just want to get their clicks at the end of the day, and they got to get that headline out there of is the 4-year cycle dead? It's definitely a really interesting kind of debate right there. And I guess Austin, did you want to add anything about? Do you think if the 4-year cycle is dead?
Yeah, the amount of captain's log voice notes, Paul and I have spent on topics like this would take longer than we have here. So. But my quick TLDR would be, we'll see. And the reason I just kind of I'm like, I don't care, we'll see, is because if Bitcoin is a long duration asset, it's really, really important that people understand that. This isn't something that you want to buy because you're looking to make money. This is something you want to buy because you want to protect your money for the next 100 years. And I don't say that in jest. Like that's like, it's a long duration asset. If you purchase Bitcoin at any moment in time, even the tippy top of 2017, close to where, Dave and I first started, buying Bitcoin, as long as you held it for at least 4 years, you're in the money, and you're in the money pretty big, right? So for me, these 4-year cycles is a bunch of consumer sentiment. If you want to define consumer sentiment, is people yelling at the blue sky yelling at the sky on Twitter because they're looking at hourly and daily charts. And I'm just kind of like, if you're in this for hourly or daily or yearly gains, like you got to find something else to do, man. Because this is a long duration asset. This is a savings technology. This is a city where you purchase this is Manhattan in 1900, and when was the best time to sell to buy a piece of Manhattan real estate? Yesterday. And when's the best time to sell your Manhattan real estate? Never. And so I kind of view it from that perspective. But just to so I don't really have like any words of advice in terms of where I think we are or where I think we're going in terms of that. If you want to talk about like, the cost basis of Bitcoin, you could theorize that these 4-year cycles are driven by, as soon as the halving occurs and the production cost immediately doubles overnight for the miners. Like today, if you look at the cost to mine a Bitcoin, I'm an investor. I'm a limited partner in a few miners that I invest in. And if you look at like the cost basis of how we mine a Bitcoin, it's like somewhere between 50 and 75,000, depending on the energy price fluctuations and different things. So like I kind of view that as like that's like the cost, that's like the floor, so to speak, right? So that's kind of I often look at my balance sheet in terms of that cost basis and not at the market value, and that kind of helps me temper my expectations for where we're at. So that's interesting to think about. Okay, well, if the cost of a commodity doubles overnight, like shouldn't the price double like pretty soon after? And then if the price doubles pretty soon after, like Bitcoin's a mirror just reflecting human nature at the end of the day. Because Bitcoin's just true. It just is, right? Bitcoin doesn't change. Everything around it changes. And so, what's human nature as soon as something does a 2x? The money floods in, and then it chases, and then it goes 10x. And then Mr. Market says, well, it's not worth 10x. This is ridiculous. This is frothy. And then what does it do? It draws back down. And then what does the market, decide the value is? Well, the value is now higher than it was before because the production cost is higher and aware. So, that's kind of a thesis. People have also mapped, the 4-year cycles along liquidity cycles of M2. It's a cool looking chart, but, okay. They've also mapped it along PMI, which is a measure of like business cycles, which historically, has kind of rolled in these 4-year terms. Okay, it's interesting. The 4-year cycles also align with election cycles. So like, what does a president do? As soon as they get into office, they want to print money, man. They want to turn that money printer on. So, so what is Trump talking about right now? He's talking about lowering rates. He's talking about 50-year mortgages. He's talking about, giving people a Donald Trump check like he did during COVID, on the tariff, dividends. So, I don't know. We'll see. It's a fun thing to talk about for sure. I love this topic.
All right, Paul, kind of a last question here for you. I know you want us to ask this, so I thought I'd give you a chance to speak on it. How do you value MSTR long term?
All right, so this is the hardest. So just so my dad and Austin know, I gave them a couple questions that I thought were hard ones to answer, and so hence the 4-year cycle and MSTR questions. So MSTR, I would argue as of right now is one of it's one of the short-term hardest things to value. Short-term. Long-term, I think it's going to do great because it's sitting on Manhattan real estate that's going to go up 29% a year every year for probably something like 30 years, right? So it's sitting on real estate in Manhattan. The question you have to ask yourself is, what year in Manhattan is it? If you go back and look at Manhattan, there have been great booms and big busts in Manhattan, right? So if you went back to, I think, New York in the late 60s and early 70s, if you were a savvy investor, you would have went and bought Manhattan real estate in 1968. You just would have. Now you would have had the foresight to see what it would have became. And so MSTR, I think, is, to me, kind of fits into that category. I think there's another added complication to this, which is over the last 9 months, MSTR is no longer just MSTR. It's MSTR plus all these different preferred stocks and dividends and all these other financial aspects to the company. And so, when you looked at MST to start with, they did two things, right? They took their small, relatively small, but ongoing cash flow, plus they took out what looked like very traditional bank loans, and they just bought Bitcoin. And I think if you go to the retail market and you tell people, hey, we're going to accumulate as much Bitcoin as we can, and we're going to do it via those two mechanisms, people in their mind, for the most part, can conceptually understand what that company is. It's easy to understand, like, hey, yeah, they generate cash from software, they borrowed money from a bank, they got to pay the bank loan back, they got excess cash, they're rolling their retained earnings into Bitcoin. Easy. You look now and they've got Strike and Strife and Stream. I think they've got 4 or 5 or 6 different preferred stock options. And I just think that combination of financial elements makes it a much harder thing for your normal retail person to understand. And I think it's going to take a while for the market to digest it. What I would say long term, though, is it looks to me like if you just step back and evaluate all those different flavors, strike, stretch, all these different preferred options, and you say, is that strategy effective at accumulating the hardest, most scarce asset on the planet at a cost significantly below typical borrowing costs? You would just check the box yes, right? You would just say, hey, if the goal is to die with the most Bitcoin, strategy is going to do that, right? And so I think we're kind of stuck in this spot right now of It's very complicated when you get into the details. And long term, it's probably going to do great. And so, how do you take an asset like that and think about it in your portfolio? And also, just I know I'm going on and on this, but I think you have to add into the context of most people who own MicroStrategy, almost everyone owns some chunk of Bitcoin too, right? Very few people just own MSTR. Some people do, but it's mostly people who own Bitcoin. And so you're back into this conversation, which I've actually had with my dad in Austin ad nauseum. Like, and this is the area that I actually don't have a good answer. What is the right percentage of each to own, right? Is it 90-10? Is it 80-20? Is it 70-30? Is it 100-0? And I find very few people who have a lot of confidence in their answer. I mean, I think the people who are most confident are the people who say, all I want is cold storage Bitcoin, right? Because you can sort of sleep at night and understand what you own and hold your own keys and make an argument that the rest of it is tied up in, if it's MicroStrategy, it's tied up in Wall Street now. But it's a really, really hard question, and I don't have a great answer for it. I know it fits into a portfolio somewhere, and long term you want it. You want it as part of your portfolio. But in the short term, it's like a maximum IQ test. I mean, it's like a really hard math equation to figure out. And that's why you find a lot of math and engineering PhDs arguing on social media, like what to do about MSTR. People disagreeing like, hey, this is an awesome asset, great time to buy. And a bunch of other people being like, no, I want to get out and just own Bitcoin. So like I said, I could probably go on for another hour about this, but I'll let my dad take the next stab at it.
Yeah, go ahead.
Yeah. So I own both. I think that, I think probably for some investors like myself, it may be it's just easier to own MSTR than it is to own, to buy Bitcoin and put it in cold storage. So, I mean, I have a combination. So Paul was talking about. So I have a combination of, Bitcoin and cold storage. I own some MSTR. I own some IBIT. I think all of those contribute to the adoption of Bitcoin. So, like, I'm good with all of those types of I'm going to call them assets being out there for people, or if you want to call them just investments for people. But I don't have the exact answer of the mix. So when I was buying, I'm still mining, Bitcoin now, and when I own MSTR, I was texting Paul today. I mean, I'm thinking, maybe I need to buy more right now if it's going to go below one, NAV. Maybe it is a really, really good time to pick some more of it up. So I think the market's still digesting everything with MSTR. I really don't believe that there's a consensus probably in the market. Oh, here's how all this works and MSTR, and everybody understands it. Everybody understands Apple stock. Okay, everybody understands buying, the SPY, VTI, pick your favorite, mutual fund or ETF. People understand that. MSTR is still, I think you need to do a little research if you're going to own it, understand what you're getting into. Some people don't, again, they're not going to want to own anything cold storage. So I've had good friends tell me that, like, they just don't want to do it. They're going to call their stockbroker up who manages all their money for them, their investment group. And that might be a way for them to have their, feet in the water, per se, to own, MSTR, IBIT, or whatever they want to own. But the exact amount, I really can't. I really can't tell you. So
Yeah, that's all right. I know that we're kind of running short a little bit on time, and I know we have some audience questions. I was going to ask if maybe you guys could stay on for maybe about 10 minutes after. We have a specific question from one of our board members that we want to go over later. That might be a little bit more private, and it's a little bit more, a lot more complex, and I don't really think it might add a lot of value to certain people. And I think these audience questions might add a little bit more with that. So one of our first questions we have is stocks trade many times their intrinsic value, but they are at least based on the fundamentals of the company, which gives credibility and a floor, so to speak. Does Bitcoin have anything similar? And Austin, maybe you want to take this one?
Yeah. So, Bitcoin's been trading 24/7, 365 for the past 15 years. The equivalent of that in traditional finance terms is closer to like 25 years of trading days. So we have 25 years of price discovery. Each coin is transparently tracked and can be viewed publicly by anybody using super simple software. You don't even need a subscription. And so you could look at the cost basis of the last price those coins were transacted at. That's an interesting way to look at cost basis. The production cost of all those terawatts of power now. I'm not even sure what we're up to. I already shared with you the power of this thing. Its footprint is larger than nation states in terms of its power projection. That's the miners. Those are the Bitcoin miners, and so they set the cost basis for where the Bitcoin is mined at. So that's something to think about in terms of the fundamentals of the network. And so I think those are two things to point to. It's provable costliness, and it's provable global liquidity of Mr. Market assigning a value to it for 25 years.
So I have to chime in on this.
Yeah.
So intrinsic value theory is a modern finance term that gets used to value companies. Okay. The proper way to think about asset valuation is subjective value theory. That is the correct way to think about assets. Okay. And I know in academics, we hate going down this path, but this is the right way to think about it. And all you have to think about is things in your day-to-day life to prove this point, okay? Behind me is a bunch of Pokemon cards my kids collect that are worth a lot of money, okay? Why are they worth a lot of money? Because people subjectively add value to it. That's how value is added to things in society. And so what Austin's talking about is, something that's traded, highly liquid, you can self-custody, right? All the attributes of Bitcoin. People add their own subjective value to that, and that gives it value. So to think of something as like, well, it has no cash flow, therefore it has no value, is it's a naive way to view the world. And I'll just give you one last anecdote on this. If you would have bought gold in the year 2004, and you would have bought the S&P 500 index in 2004, and you bought $1 million of each, your $1 million would be worth more now having bought the gold than the S&P 500. And the S&P 500 is just full of companies that have, quote, cash flow or, quote, intrinsic value. And gold's a shiny rock that does everything that Bitcoin does, except not as effectively. So the marketplace of ideas assigns subjective value. And so I had to throw that in there as, for me, the intrinsic value thing, it constantly gets floated out there. And it's just Austin points are correct, but to me, it's an incomplete picture of how you assign value to something.
Good stuff.
All right, David, I'm going to kind of pass the last question to you here from the audience. Could Bitcoin become something nations store and use strategically, like oil or gold, because it lets them move money globally without using the US dollar or the US financial system?
Well, yeah, absolutely. So I'm old enough to look back and think about how 30 years ago you moved money around the world, right? So 30 years ago, so Austin went back in time and talked about a couple things. So let's talk about how we moved money around the world. So 30 years ago, I would have had to get a hold of my bank, right? Literally call my banker up and said, "Oh, I'm going to buy some goods from you." And then now what do I do? Oh, wait a minute. Okay, so I've got to get this thing called a letter of credit, right? So I'm going to talk about things maybe nobody on the panel probably knows about, right? So you got a letter of credit, and you'd sign this letter of credit, and that letter of credit would tell somebody 8,000 miles away in China that you're good for your purchase of that goods and services that you have coming here, right? So fast forward 30 years, right? So what do we do now? Well, we wire money. So we eliminated that letter of credit, right? Just that letter of credit. So now I wire money. So for me, it hasn't nothing's been developed in that space except Bitcoin solves it all. I just sent money, I think 3 weeks ago. So I have a China supplier who's actually attempting to not have money moved to China for a number of reasons. So very concerned about his money in China, the liquidity of his money in China, the value of his money of China. And he asked me to pay him on a Greek bank account. And I said, sure, it doesn't matter to me. So he sends me all the information. I get on to wire the money. I can't even wire US dollars to Greece. Think about that. Yeah, it's like, I got back with him. I said, I can't wire US money. He goes, oh no, you can't do that. You're going to have to send it in euros. So I'm just like, wow. Okay. And when you had a letter and credit, that all took several days. And then then when wire transfers came about, everybody's like, oh, wire transfers, they're just going to be great. You're going to make this instant payment to everybody. Well, guess what? It's not an instant payment. It's not. And if you haven't done one before, I can just tell you, I can sit on right now and make a wire transfer to China or India or Greece, and it will probably take 2 or 3 days before it gets verified, actually put in the account, right? And what would it take, Austin, like if I wanted to send and buy some goods with Bitcoin to China, not China, probably not a good place necessarily. Let's say India or Greece. So how long would it take for me to wire, $65,000 worth of Bitcoin and somebody to actually receive it?
Well, first of all, you don't have to ask permission. You can just do it
Yeah,
yourself.
exactly.
Okay. So
Yeah.
there's no appeal to authority here. You just do it yourself.
Yeah.
Depends on what you want to pay the network, Dave.
True.
Because the miner's got to validate that transaction. If you could also use some sub networks like the Lightning Network, and then it'll be instantaneous, like blink of an eye.
Yep.
But my best estimate would be somewhere between 10 seconds and 4 minutes.
Yep. There you go. So
at a cost of de minimis.
it solves all the
yeah.
problems.
You want to send your $65,000 to Greece right now in Bitcoin? Good. You can get in the next 10-minute block for 14 cents.
Exactly. And my fees from my bank have gone down from $50 to $25. So 25 versus, yeah. So cross border payments is a complete no brainer. So, and
Or you can oh, I'm sorry, Dave. Or if I was just in Zurich, Switzerland, and I needed to swap $300 of cash for Swiss francs, and you want to know what the currency exchange place charged me? And you want to know what the exchange rate that they
probably 10%. Did they take 10% of your money?
It was more. And then you want to know the exchange rate they offered me and what the spread was on the exchange rate they offered me versus what it's currently traded on Forex.
Probably similar.
Yeah, similar. So they made 20% margin on my $300, and the Bitcoin network it would have cost 14 cents.
Exactly.
So it's a orders of magnitude better technology.
In the Bitcoin standard, which was written back in 2017, Saifedean talks actually a lot about this exact situation, about the foreign market, the foreign exchange markets and the fees. And it's something like, back then, it was like a multi-trillion-dollar market that all it's doing is collecting fees based off foreign exchange rates and spreads. And you want to talk about people who are pushing back against Bitcoin. there's going to be a $3 trillion market who wants to collect spreads on foreign currency differences. And with Bitcoin, if you go to a Bitcoin standard, that number goes to 0. So of course you're going to have people against it for that reason alone.
Yeah, so somebody, most likely the big bank, I won't say the name of the big bank, right? There's a stagecoach and horses though. And but I'm sure they had my money for some period of time, right? I don't know, an hour, 2 hours, 10 hours, 12 hours. They did have my money for some period of time before it actually dropped somewhere else and somebody had access to that money. So I'm a very small, fish in the pond. So extrapolate that out, like Paul just said, with trillions of dollars, and there is a lot of money there.
Yeah, well, I just wanted to thank the panelists again. I know we're pretty much running out of time right now. I just wanted to say thank you. Is there any maybe closing quick remarks? Maybe something that takes 30 seconds from each of you, or maybe some advice, just real quick before we wrap it up.
I'm gonna give my time to Austin. Go ahead, Austin.
Oh no, I was gonna look at my notes. Can you go first, please? Let me look at my notes.
Yeah.
I can't do anything in 30 seconds.
My advice is really simple. So this is what I tell everybody that's younger than me that want to get involved. So open up an account, like let's say Strike, and just start automatically having money taken out of your account, dropping in Strike and buying Bitcoin every week. Whatever it is. $5, $10, $20. But start.
That's a great point. Austin, you got your point ready?
It's not going to take 30 seconds, but I'll do my best. We're really at an inflection point, and if Bitcoin fulfills its promise, I believe the world's going to be a much better place. Provides people with the ability to save their time and energy that's currently being siphoned away by a funhouse mirror, and they don't even realize it. We're living in an era of wealth inequality that dwarfs, serfdom era stuff. So people don't even realize that they're serfs. They're living on land of the owner, and they have to show up to work. And if they don't, they lose their family and their home. And I think Bitcoin provides a lot of promise in that regard. And so I'm super hopeful, and I think Bitcoin's a very hopeful thing. There's I know this non-denominationally, but back to the money changing anecdotes that Dave and I gave. There was one time in the Bible where Jesus just loses it. He just loses his cool and just absolutely gets so upset. And it's when he walks into a church and there were money changers in there, and the money changers were basically doing what we just described, changing currencies at spreads that were not transparently communicated to people. And that's what's happening every single day with hardworking people around the world, is they don't realize that they're exchanging their valuable time that's finite and scarce on this earth for money that is fundamentally broken and is rotting in their hands and has a half-life of 7 years. And so, the ability to have access to a technology that can protect your life source and store your energy, and you can have that option to use it in the future. Satoshi didn't just create money; he created time, and it frees people, from the shackles of having their time stolen from them.
Awesome, thank you. Paul, do you have anything to add real quick, or?
All I'll say is you all should read the Gigi article, Bitcoin is Time. And if what Austin's saying doesn't make sense, that article will help clarify it in your mind. So, but the students hear from me plenty, so I'm glad they got to hear from other panelists tonight.
Yeah, and we can include that newsletter in our follow or our recap email to all the members who have came and whatnot. I guess with that, can we get a round of applause for our panelists real quick? All right. Thank you very much for your time. We were going to see if maybe you could stick around for maybe 10 minutes. We'll turn it off the smart board or the display up here. Maybe just have a quick conversation about maybe some other questions that maybe we wanted to answer kind of as a board. For the rest of you guys, for the audience, you guys are free to go. I know that some of you guys have beta card making. I guess with that, if you could maybe do that in the back, and we'll just be up here. We won't be in your way. And if you want to join as well, feel free as well. So thank you all for your time, and have a great night.
Thanks, everyone.
Thank you.
That was fun, guys. Good stuff.
How long were you in Zurich, Austin?
All right, guys.
Uh,
All right.
3 days.
Paul, can you hear us?
Yeah, all good. We can hear you.
I just didn't have my volume up and out. Adam, you want to ask your question? So Paul, I don't know if you met Adam or not. He's the new board member from FMA.
Great. Hey, Adam.
Hello, how's it going?
Good, good.
So, wait, I kind of rephrased things with Paul. I like answered most of it.
Okay, yeah, he had a really good question. Basically, Adam and I are friends. We went to Culver's the other day, and we talked about Bitcoin for about an hour. It was pretty good. I haven't had too many conversations like that with people around here. And he definitely knows a lot. And he had a really good question that was way too complex for me to ask it. And I think it's probably better if he asks it in kind of how he wanted to phrase it properly.
Yeah, and like before I ask it,
Can you get closer to the
Yeah,
microphone?
get
Yeah.
closer to the mic. Yeah.
hear me better now?
Yeah.
Yeah.
Perfect.
So before I ask it, I just want to like preface and say like it's about the whole quantum thing that Paul already kind of covered, and I'm not like a quantum bull or someone who thinks it's going to come soon. This might be like a 15 to like 25, 30-year problem, but like when you were talking about the security and you said that the Bitcoin can just do a soft fork, but to upgrade the cryptography to a post-quantum cryptography, you actually need to do a hard fork. So I was kind of curious on like if Bitcoin was to hard fork, would it require the users to move their coins to a PQC address, post-quantum cryptography address? And then would they burn the coins that weren't transferred to that address? And if they didn't do that, what are they going to do with all those unmigrated coins? Because once a quantum computer is invented, then you can derive the private key if you have someone's public key. So that means Satoshi's coins would get stolen if they were not migrated or burned. So I just was like really curious on if you guys had any opinions on that and some clarity.
I'll take a stab at this first, and I'll let Austin jump in. So I think, and I don't know if we're gonna have to, I don't know if we disagree on this or if we're looking at different things. It's my understanding that there's current bit proposals, so Bitcoin protocol improvements, proposals in place now to have migration to quantum proof addresses through a soft fork. I don't actually think a hard fork is required. Not to say it couldn't hard fork and that it won't hard fork and that's not the better path, but it's my understanding you can actually soft fork, which my sense is that's the more probable path. If but let's put that off to the side for a second. So let's say it does hard fork. I'm really bummed we don't have Justin McNeil on this panel because Justin McNeil, another one of our kind of buddies, very into Bitcoin. He's in a kind of the same Bitcoin class as Austin in terms of when he got into the space. But those guys lived through the Bitcoin Cash hard fork. And so we have a perfect analog of what that looks like when Bitcoin hard forks. The lesson I would say from my takeaway as someone who's not in the space but who's looked at it closely is when there is a hard fork, it's very unclear which coin is necessarily going to be the winner, if that makes sense. If you go back to Bitcoin Cash, I think there was a short period of time, and Austin, correct me, where Bitcoin Cash and Bitcoin both looked sort of as viable options, and then over the medium term, the core Bitcoin, not Bitcoin Cash, basically took over the marketplace. What I would point you to, did you say your name was Adam?
Yeah, Adam.
Okay. So what Trevor should have done is have you read the book, The Block Size Wars. So this book is, I have a copy in my office. I think there's a copy in the library, because this actually explains the exact phenomenon that happened back in 2015, was it, I think, or 2016, where a hard fork, there was like a discrepancy between what people thought they wanted in Bitcoin and something else. And if it's going to hard fork with quantum, I think we actually have a playbook on that. You should go read that book. It's a very, good book to read. The other point I want to just mention real quick about Satoshi's coins, and again, if Austin, if you have 2 cents on this, I don't know if we've even talked about this, Austin, but I've heard passionate arguments about both sides on this. That if you soft fork the network, some people say you have to, in the soft fork, set up a protocol to let those coins burn or be unusable. And I've heard other people say that's an unethical thing. If Satoshi doesn't want to move his or her coins and a quantum computer gets them, that's his or her problem. I would just say, for me, as of right now, my current position, and I'm going to reserve the right to change my opinion on this. My current position on this is that it would be unethical to burn anyone's coins. So if you've got coins that are subject to quantum attacks, it's your duty to move them to quantum proof addresses. That's my own 2 cents. I don't think you can assume someone's coins are like too old, or somebody's died or whatever. And the argument, sorry, I'm going on and on, but the argument I've heard for this is, well, you have to burn the coins because whoever hacks those coins is going to presumably be like a bad actor and like dump all the coins or do something nefarious. And I think that's a big assumption we would make, right? Even if a quantum computer could get Satoshi's coins, we don't know, what nation state or what company would do that, and then what they would do with those coins. They might have no incentive to sell them, right? They might just hack them, move them to a quantum proof address, and then sit on them. So, I think it's too many unknowns to burn the coins. Austin, I don't know. We haven't talked about this that much. Did you?
Yeah, we haven't talked about it much. I mean, nice to meet you, Adam. Great question. A couple things on this. First of all, I don't understand quantum, and there's probably only 30 people in the world who do, right? And the latest little article that I saw, that's who knows what we're getting out of the media these days, but said something like, China just solved a math equation with quantum that was, and they just, it was like the orders of magnitude of how difficult it was basically, makes Bitcoin look like, peanuts, right? It was finding a speck of sand in the universe, right? And it's like, okay, well, you put 10 monkeys in the room and they eventually get the right answer. That doesn't mean like it's like repeatable. Like, I don't know. Like, I don't understand quantum, so I'm just kind of speaking just in terms of like, just trying to get my monkey brain around it. And then, you have solo miners that mine a block individually all the time. And I'd be curious, Adam, if you wanted to research like, what is the order of magnitude likelihood of that versus like the best quantum equation that's been solved, right? Like, and that happened like 27 times this year, right? So like, is Bitcoin actually demonstrating like quantum level mathematics just with that probability right there? I don't know, right? So, a lot of this, I think is just TBD and is on the come and is interesting to like think about and read about. And of course, I've seen Spider-Man and all the Marvel movies, so I'm very familiar with quantum from that perspective. But that's about it. And show me the incentive, and I'll show you the behavior. If Google used to be one of my customers, so I can't talk about all the Google campuses and headquarters I've toured. I've seen some really cool stuff. And let's say this big room where the quantum computer is that's doing incredible things, it unlocks, laps China, and all of a sudden quantum's here. Like, what do they do with it? You think those like, do you know the amount of energy that goes into solving one equation of quantum? Like, you think the Google shareholders and want them spending that money on that? Like wouldn't they want to hack JP Morgan instead? Like, wouldn't they want to hack China, instead? Wouldn't they want to, uncover the Epstein files instead? I'm making jokes, but
Yeah.
No,
I think about incentives a lot, and the amount of power and hardware that's required. I don't know if Thanos level evil would even waste his time on it. But I don't know.
no, yeah, I completely agree with you. I'm actually short a lot of quantum companies because there really is no other application other than this one algorithm which quantum computers can run called Shor's algorithm, where it's really cool with cryptography. So that's why a lot of people are saying, it's like a threat to Bitcoin. But honestly, that's really the only thing that it can do right now. So there is really isn't any incentive to kind of build it out like you were saying. But I think we were talking about the hash rate and the amount of energy, but if you had something to solve the elliptic curve, it actually doesn't have anything to do with the energy or mining the Bitcoin. It's actually just about the public key and deriving that private key from it. So you can just move the coins if you have someone's public key. But yeah, I really appreciate your insight on that. That'll help.
And from just a quick blocking and tackling after someone who experienced the block size wars. So at that time, I just I wasn't doing self custody. I had my coins in, with a custodian exchange. That custodian basically, said, hey, we're now supporting Bitcoin Cash. And it's just a 1-for-1. It's here's your Bitcoin dividend, basically. Now you have Bitcoin, you got X amount of Bitcoin. Now you've got X amount of, this, right? And then you can, choose to sell or, buy either one. Not all custodians supported the new one. So that basically that was a dividend to the custodian. So now you're keeping out your coins. Okay. Super important. And then, but in terms of the elliptic curve and that stuff and the public private key, there are some really interesting articles, and I'm not recalling who wrote them, of they were layering out the near, medium, and long-term exposure of the coins, and it was in the near term, the legacy addresses that have spent from that public key, those are the most vulnerable, and they estimate that that's within maybe a 5-year time horizon, that those could be vulnerable. And then there's the next layer up, which is they've done they're on the updated versions of Bitcoin to the point where it's much more private, much more secure, and even if you have a spent output from that public key, you're a little bit more vulnerable, but that requires, I think, a different level of quantum, and then there's varying levels after that. And so I think it was the total near term exposure is less than 3 million coins, and that was kind of the order of magnitude I recall from the article.
So one other thing to add, Adam, is one of the things people point to, which I think is very underrated in the, I'm not a big quote crypto person. I'm more of a Bitcoin person, but oftentimes what we see is where there are potential upgrades for Bitcoin to be made. What Bitcoin does generally is it is not the first one of all the tokens to add something or improve. And we can actually go back and look at an example of this with SegWit. So segregated witness was an improvement in Bitcoin a number of years ago, and it launched in Litecoin years before that. And so the Bitcoin community was able to look at SegWit and how it operated in Litecoin for a number of years, viewed it as safe, and then incorporated it into the protocol at a later date. So I actually view quantum very similarly. So we have something like 20,000 coins on Coinbase, and there's a lot of them, or most of them are going to have the same quantum questions. And so what you'll do is you'll see lots of experimenting in these other coins that have very little value. And I suspect what we'll see is the Bitcoin protocol will look to see which of these coins has done it the best.
Mhm.
And then as a community, they'll say, hey, look to see what Avalanche did, or look to see what, another coin who has maybe a big development team. Take that, incorporate that into the Bitcoin protocol, and then roll it out. So I don't view Bitcoin as like the test case, right? Like there's going to be an improvement rollout and everyone like holds their breath. They're going to probably look at the network will look at a best practice and adopt something else that's worked. When I look at history, that's kind of what I think is going to happen.
Yeah, that makes total sense.
Good stuff.
Awesome. Thank you guys.
Yeah, that was a great.
It's good meeting you too.
Thank you guys for staying on after too.
Hey, thanks for having us, guys.
You guys have
Yeah,
a great,
thanks a lot.
Yeah, you have a great resource.
Thank you.
What a professor.
Thanks.
Yeah, we do. I hope to see you guys.
Yeah.
Or those who are going. Yeah. Are you guys planning on going?
Can't hear you, Trevor. Can't hear you.
Are you guys all planning on going to Vegas here or some?
We'll be at the they're coming to the conference. Yeah. Oh yeah.
Okay.
So
Well, hope to see you there. Thank you again for your time.
Yeah.
Have a good night.
Yeah, we're gonna post the clips. We're gonna hopefully clip it soon and post the clips. There's gonna be some great clips from this. There were a lot of really good spots in here. So
great.
yeah, some mic drops. So we'll go viral.
All right. Appreciate it, guys. Thanks for having us.
Thank you.
Thanks a lot.
Yep.
Thanks a lot. See ya.
Yeah.
Yeah, that was a good